If you're a doctor, dentist, nurse practitioner moving to or already working in Lancaster County, you may be able to buy a home with 0 to 3% down, with no mortgage insurance, even if you're carrying six figures worth of student debt. In today's video, I'm running through two local lenders who actually do this, who qualifies, and real numbers on a $600,000 home. Lancaster General, Penn Medicine, and Lancaster General Health, they draw a steady flow of residents, fellows, and new intendings into this area. And the good news is, wherever you land, you're close to one of the major systems. The struggle that a lot of medical professionals face is that they carry lots of student debt, so it can be tricky to qualify using conventional financing methods. And that's the problem that physicians loan solved. Young physicians have strong income and weak paper credit profile, huge student debt, maybe a short job history, and maybe you haven't even had time to save for a down payment because you've been too busy finishing school. Conventional and FHA loans often reject that profile or they price it poorly. Physicians' loans exist to fix that. They're betting on the fact that you spent years of training for a career that's stable for the rest of your working life, that they will underwrite you as a lower risk. The first bank I'm going to mention is Fulton Bank. They are a local lender in the area. They're headquartered right here in Lancaster with branches throughout Lancaster and York County. The program is the medical professional loan, and who qualifies? So MDs, DOs, dentists, pharmacists, veterinarians, as long as you hold a medical doctorate degree. What they offer is 100% financing up to 1.5 million, 95% financing up to 2 million, and 90% financing up to 3 million, with no mortgage insurance, plus they'll pay a whole bunch of your closing costs at settlement. This means that overall your out-of-pocket expense is going to be very low. The reason why this program works so well is that student loans that are deferred by more than 12 months are going to be excluded from your debt to income entirely. So as long as you have an employment contract starting within the next 90 days, this is what the program is built for. It's available in Pennsylvania, Maryland, New Jersey, Delaware, and Virginia. However, the one caveat is that it does currently not cover nurse practitioners or PAs. If you fall into one of those camps, then Traditions Bank could be another great option for you. Lender number 2 is Traditions Bank, which is a division of ACNB Bank. They have a branch in Oregon Pike, and their program is the home buyer program for new doctors and dentists. So who qualifies for this? So it's much broader than Fulton Bank's MDs, DDSs, DMDs, anthropologists, DOs, pharmacists, chiropractors, nurse practitioners, and physical assistants. Wow, what a mouthful. So you do have to be relatively new to your field. That said, under 10 years and up to 9% loan to value. So as little as 3% down. Again, there's going to be no mortgage insurance. They only allow a 30-year fix, so no 15-year options here. And it has to be for your primary residence. And a little sweetener, if you open a new bank account with them, they may even chuck in just towards your closing costs. If you're a nurse practitioner, PA, or someone who just wants the broadest eligibility with the smallest down payment, Traditions is going to be the way to go. And a quick little disclaimer, eligibility rates and terms set by each of the bank's underwriting and can change at any time. So this video is just highlighting that these programs exist and that people with high student debt can get into stable home ownership. Again, always confirm the current terms directly with the lender. This is for educational and not the guarantee of approval or specific pricing, and your own credit profile will affect all of this as well. And here's why the student loan waiver matters so much. Lenders look at your back-end debt-to-income ratio, every monthly debt payment you have, including your new mortgage, that's any car loans, and then they divide that by your gross monthly income. Say you gross $5,000 a month and you're already paying $1,000 a month on student loans. Under a conventional loan, that $1,000 will get counted against you before they even look at the mortgage. And that $1,000 can shrink the amount you can qualify by about $150,000, because that's how much of a loan amount $1,000 a month payment buys you at today's rates. Now, both of these physician programs waive that as long as your loans are deferred or income driven. Fulton requires 12 months plus deferral. With Traditions, you'll probably speak to lenders to see what their terms are. But this is the single biggest reason why someone with maybe $250,000 worth of student loans can still qualify to purchase a home. So let's put this into practice. Let's say you're looking at around a $650,000 home. The home I've actually pulled up here is in Village Drive in Lidditz. It's a good size, 4-bedroom, 2.5 bathroom property over 2,400 square feet, and it's on the market currently for $620,000. It's in a nice neighborhood about 20 minutes from downtown Lancaster. So if you're working at Lancaster General, you get the advantage of being in a neighborhood without having to be in the city. It's also pretty easy to get to places like York and Philadelphia because you can get straight onto Route 30 and go east or west. So let's run those numbers quickly. So using this property as an example, let's say you're putting 0% down from Fulton Bank. You've got an interest rate of around 6.5%. The taxes on this property aren't too bad at $5,000. So that added together. Now the huge benefit, as you'll see here, is that you don't have to pay the mortgage insurance. Depending on your credit score and the loan amount, this can end up being hundreds of dollars a month. So as you can see here, the kind of calculator automatically made it about $500 a month. That seems a little bit high, but the good news is you wouldn't have to pay that because of this particular program. So looking at your real estate taxes, your principal, and then probably add about another $100 a month for your insurance, you're going to have a monthly payment of around $4,450. The real sweetener here is the cash to close. So let's say you've got a good salary, but you don't have a huge amount saved for a down payment. Being able to put 0% down on a physician's loan means that your estimated cash to close is going to be around $17,000. So buying a $600,000 home for only $17,000 out of pocket is a pretty good deal. Better yet, on these programs, you can also ask for somewhere between 3 to 6% seller help. Now, I can't guarantee you're going to get money back at settlement, but technically, if you ask for the 3% seller help, this calculator is saying that you actually wouldn't have to bring any money to closing, which I think is unlikely, as there are limits and you have to bring something to the settlement table. But the fact that you could probably purchase a $600,000 home with less than $5,000 out of your own pocket is a pretty good deal. Now, let's say you're going to do that 3% down option from Traditions. Now, 3%, your cash to close is going to be increased. You're back to bringing about $18,000 if you're getting that seller help, or about $36,000 if you weren't. Your overall monthly payment is going to stay almost exactly the same. Your payment only drops by about $120 by putting an extra $20,000 down. So it's up to you. If you have the money, you can put it down, or if you can use the Fulton one, then you need even less money and your payment's going to be pretty comparable. So either way, the monthly payment is going to be staying the same. So the real decision is you'd rather keep $20,000 in your pocket or put it down to save a little bit off your monthly payment. Now, most importantly, does it even make sense to buy? So one more thing that I will say is, does it make sense to buy right now? If you're only going to be in the area for a couple of years, maybe you're mid-residency or still studying, I would not rush the purchase. Closing costs, maintenance, and everything adds up pretty quickly. So, and oftentimes, if you're going to be staying here for less than 3 years, it may make sense to rent. Now, that said, if you're planning on being here for the next 5 to 10 years, home prices continue to rise, interest rates, who knows what they're going to do? Maybe they stay the same, maybe they go up, maybe they go down. However, home ownership is only getting more expensive and property prices keep increasing in our area. If you're planning on being here for more than 5 years, now could be a great time to take advantage of these programs whilst they're around and get yourself on the housing ladder. Now, if you're a physician, dentist, nurse practitioner, or PA relocating or working in Lancaster County, click the link in the description below to book a consultation and I'll help you get connected with the right lender to go through your options. And if you're not even sure, what can I even buy at this price point yet, then check out this video here where I break down exactly what $600,000 gets you in Lancaster County right now.